What's up, guys? Stas here. So an absolutely brutal day so far in the stock market today. S&P 500 down 172 points, down almost 5.5%. The Dow Jones, guys, almost 2,000 points in the red, down 1,700 points, 6.5%. And the Nasdaq down 440 points, down about 4.5%. And in this video, we're going to talk more about the markets, breaking down some technicals, talking about how far could the markets pull down? Is the stock market crashing again? And I also want to share with you guys a bunch of stocks that I'm looking to buy right now. And many of these stocks, all of them, got crushed today. So I'm looking at this day as potential opportunity here in the stock market. So I want to share with you guys what I'm personally looking at and what I've been doing in the markets as of late. So if you guys enjoy and find value in the content, as always, hit that like button for me. Consider subscribing to the channel, and feel free to join our Discord chat and Facebook group, link down below in the description. And you can also get 2 free stocks from Webull valued up to $1,400. That's also linked down below, and all of those links are free of charge to join. So let's get into the market update, guys. And again, this is an absolutely brutal day, and I'm having flashbacks to back in March when the whole crash begun, right? And if you guys were not in the markets back then, I realize many of you watching this channel, a lot of my views have been going up, so there's a lot of new viewers out watching this content. I realize a lot of you all were not in the markets prior to this whole drop, and honestly, you weren't even in the markets during the drop. So you can see here the S&P went from 3,400 down to 2,200, right? That's a haircut of about 1,200 points. And during this time period, we saw many days like this where the markets were swinging 5%, 6%, 7%. I believe the worst day we had was a 12% day in the markets, which is unheard of. Usually you see 12% gains in a year, 12% losses in a year, but you saw that move in literally one day. This is unheard of market behavior, right? And with today's session, I'm getting, again, flashbacks to that. And just so you guys understand, this has been the norm. Not the norm, but during that crash that we saw, the 5% days, it was weird, the psychology behind it. They started to become normal, right? I would wake up and I'm like, 5% down day, that's nothing, right? 10% was yesterday, so 5% today, that's not too bad, right? But the truth is, this is far from normal. And I've been on the channel talking about how the markets have been very overheated, right? I talked about it yesterday. I've been talking about it in pretty much all of the videos over the past 7 to 10 days, right? And I've talked about specific levels here on the S&P 500 that you should watch for. That, I was like, okay, watch out for these levels. If we break, we could be going lower, right? And some of these levels were 3160. And you guys can see it actually better on the 20-day chart. You guys can see the first one, 3160. We completely gapped below that, right? And the one under that I was saying was, okay, 3120. We completely blew through that one. And then another one I was saying was 3070. We completely blew through 3070. And just now, guys, it's crazy. We're almost back into the 2900 territory. We're at 3011 right now on the S&P 500. With about 39 minutes left in today's session. So I'm looking to see, okay, where does the S&P close? Do we end up trying to break back above 3020, which would be good since, again, that is a support that I'm looking for here. If we break 3020, guys, the next major level that I'm looking at of support on this hourly chart is going to be around 2975 to about 2980. So these are some points that I'm looking at for on the S&P. And when we pull back a bit to the 4-hour chart here to get a more macro view, you guys can see we broke the 50 SMA, which has been a support for the bulls. But another place that's been a support for the bulls has been the 180 SMA. As a matter of fact, we held it back in the middle of May as we did see this launch back into 3,000 for the S&P. So watch, maybe, just maybe, guys, not saying we're going to drop another 200 points, but the chart does kind of signal, okay, if we break 30.11, like we talked about, 30.10, 30.20. If we break that and break 29.70.80, like we also talked about, we might be going back down to 2,900 to 28.50, which on the S&P here, that put us right at that 180 SMA on the 4-hour chart, which again has acted as a support back in the middle of May. So watch 2,900 on the S&P. Is the market completely crashing again, guys, going through the floor? At this point, it seems like it's a healthy pull down. It's a very drastic pull down, but we'll see in subsequent days here, Friday, which is tomorrow, and next week, if we see consolidation, if we see another gap down, and let me warn you guys, if we see another gap down tomorrow, and by that I mean, okay, if the markets do something like this again, where they completely gap down, so let's say the S&P gaps down to the mid 2900s, that's not going to be good at all, guys. That means, okay, we're going to be selling even further. But if we start to see some consolidation and we start to pop back up mid 3000s, that could be good in the short term for the bulls, right? For a potential buy the dip case. So these are kind of the scenarios you have to look at for the S&P and the different levels. And when it comes to the Dow, and as I'm speaking here and filming the video, this is getting worse. Dow is at 1,800 points in the red now. It's down 7%. And I talked about yesterday, okay, if we hold 27,000, we might fill the gap up to 28,000. But like I've been saying, right? I didn't think that was gonna happen due to the markets being a bit frothy. So I was like, okay, the likely scenario is we don't hold 27K. We fill the gap down to 25,800 to 26,000, which we just did, or we did today, and we failed to hold it. So now it looks like the Dow's going down even further. It might break into the 24,000 level, guys, which there's another massive support there, right at around 24,600 to 700, which if we hold that level, that could be where the 180 SMA meets. So it makes sense, kind of like the S&P. Okay, we might be pulling down to the 180 moving averages on the 4-hour chart. And when we go to the NASDAQ 9600, this is the pull down that I've been waiting for, right? I've been saying tech is the most overheated. That's not a mystery, right? Which is why the NASDAQ was at all-time highs, 10,150 here. That's just an absurd price, guys. RSI was through the charts. I'm surprised it didn't break through the computer screen, the RSI, that is, for how high it's been, right? It's unbelievable. And I've been saying, okay, 10,100, if we pull down, I'm looking at 97.50 as a support, right? Due to that being the general area that we held, or rather the general all-time high from a couple months ago. So you guys can see we clearly broke through that. It did not hold, and now we're at an even better price, at a better dip, at about 9,500, 9,600, which puts us at a previous resistance from a couple weeks ago, right? From the middle of May, and B, it also puts us on that 50 SMA on the 4-hour chart. So is the market crashing, guys? The technicals are showing, yeah, there's a massive pull down today, but we're not at the point where we can say the market is crashing, which is why we have to give it, again, a couple more days, tomorrow, Monday, Tuesday, see what the data looks like in terms of the candles, see how sentiment is. And again, if we get that big gap down, that's not good, but if we get consolidate for the bulls, that is, but if we get consolidation, a gap up, and some push upwards tomorrow, that would obviously be good for the bulls. So we had jobless claims come in at 1.542 million, right? And this actually keeps going down every week. We obviously know that, and major media tries to say this is a great thing, right? And I'm not here saying it's a great thing. I'm just saying what a lot of people try and say about this. They say, yeah, the jobs numbers, jobless claims keeps going down and down and down week after week. This is great, but at the end of the day, guys, it's still 1.5 million people unemployed that are filing for jobless claims. And if you guys don't know, it started at about like 7-8 million the first week, and then the past 10-11 weeks it's been slowly coming down, from 8 million, 5 million, 6 million, 4 million, 2 million. Now we're slowly getting into the 1 millions. Last week was 1.8 million, if I remember correctly. So we are going down. That is, I guess, a good sign, but it's still terrible news. Still, there's people, millions of people that are filing for jobless claims. And it's funny how they try and spin that, the mainstream media, to make it sound like, oh, it's great. But in reality, it's not great. It's still very, very bad, right? So let me know in the comments, what are your thoughts on the markets, the jobless claims numbers, everything, guys. I'd love to know what are your thoughts down below in the comments. And now let's talk about what I did. And quite honestly, guys, I didn't do much today other than I cut my Starbucks swing position. If I held it all the way up till now, I would have been down a lot more, obviously. And this goes to show, like I talk about on my channel, right? When I'm looking at a swing position, I don't jump in right away. So let's say my account, or with all of the money right away. So let's say my account is $5,000. I'm not going to jump into Starbucks $5,000 right away. I'm going to get in with, let's say, $1,000. And then as the uptrend continues, if I'm looking to swing trade it, that is, okay, I might add another $1,000. So for me yesterday, let me check my notes. I believe I got in at $78.90, right around there. So I bought in $78.90, and I was like, okay, I'm looking to add more, probably $80, $81, and ultimately sell at $83, $84, mid-80s. And today we got that massive dump down. We opened up at about $75, so that already, right off the bat, puts me in the hole at 4%. So once we saw that big pop this morning, I ended up just cutting out. I believe it was at like 75, maybe $76. So I ended up losing about 3% on the position, but it goes back to what I said. Okay, look, if I'm only in with $1,000 and I take that 3% loss, it's a way to mitigate your risk because you're not losing as much as, let's say, if you were to go in with that whole $5,000 account and you lost that 3%. That loss would hurt a bit more than a 3% loss on the $1,000, if that makes any sense, guys, right? And so, okay, so I took that loss there on Starbucks, and quite honestly, I didn't buy anything, and I didn't really do anything else. And I've been saying again on the channel how I've been very cautious. Yeah, I've still been playing offense. I still have skin in the game. I still want to be trading and being involved, but I also have cash on the sidelines because I knew the markets were getting overheated. I understood that, and I've been waiting for an opportunity like this. And you may be asking yourself, Stas, why didn't you buy anything? Because I'm going to wait until tomorrow and next week and see what ends up happening, guys, because I don't want to jump the gun. That's another thing, because if you were in the markets pre this big dump a couple months ago, first massive dump, I guarantee you many people started flooding money in, but if they were just a bit more patient, we could have dropped even further, or they would have saw that, markets were going down even further. Then they could have added even more at the lower price, because the worst thing that you can do, guys, is, and trust me, I've gotten so many questions on this, the worst thing you can do is, let's say the markets drop a little bit, you have cash on the sidelines. The worst thing you do is put all of that cash in at work once the markets drop a little bit, and then when the markets drop, the big drop, you have nothing left to go. That's where you do not want to be, right? And that's just a tip for you guys out there. And of course, this is not financial advice. Always, do your own due diligence. But from my experience, that's kind of been the truth. So a lot of stocks got crushed today, guys. Cruise line stocks, CCL, RCL, airline stocks, AAL, DAL, right? These stocks completely got crushed. And like I've been saying on the channel, right, the stocks that got hit the most out of the crisis stocks here, the airlines, financials, hotels, cruise lines, they recovered the most, but when we have the red days, they drop the most. DAL down 15% today. AAL down 17%. CCL down 17% as well. And remember last week, when was that video I made it? When CCL was at $26, $27. I was saying, look, a really nice target that I'm looking at is going to be around $18.50, and you guys can see it failed at $18.50. Now we're trading at $17, so we might even go back down to $15.50, which is excuse me, guys, the 180 SMA here on the 4-hour chart. So yeah, these stocks, they do have, excuse me, guys, oh my god, I'm choking on my own words. Whew. these stocks, they do have potential, but they're not the ones that I'm licking my chops at, right? Some of the ones, and I don't know if that's weird to say, but you guys know what I mean, right? So some of the ones that I'm looking at here, and let me show you JP Morgan really quickly. JP Morgan, banking is getting crushed, down 9%. Bank of America down about 11% today. Wells Fargo down 10%. So yeah, there's a lot of blood in the streets in these types of stocks, but the ones I'm looking at are as follows. And of course, I'm looking at these two, but more as day trades, scalp trades. But ones that I'm looking to swing trade mostly are one, Uber, ticker symbol UBER. This one got crushed today as well, down $4, down about 11%. So I'm actually looking at Uber here to ultimately hold $30. This is kind of a stock at this point that's gotten trimmed about $8 to $10 in the past day or two. So even if we don't go all the way back to 40, we might be able to get a bounce back play, some sort of a breather, recovery play, since it's dropped so much, right? So watch $30.50. That's kind of what I'm looking at here. Previous resistance on Uber. If it holds that as a support, right, we might make a move back up to the mid-30s. That could be where it sees that recovery play. So that's the first one that I'm watching here heading into tomorrow, right? MasterCard's another one that I'm looking at. I'm like, okay, this is a pretty nice dip. I actually swing traded it last week heading into this week, locked profits in yesterday, thankfully, and now we can see the stock down 6.5%, down about $21, and we're breaking $295, which I was hoping it was going to hold. It did not hold it, so that's actually telling me, okay, MasterCard, if you guys see on this 4-hour chart, a spot it's held a lot in the past has been the 180 SMA. It may be going down to the mid 200 or mid 280s rather, right? 283, 285. This, in my opinion, should be a nice buy zone for MasterCard. But again, always do your own research, guys. I'm just breaking down charts here the way I'm looking at them. And yeah, just look at what I'm drawing here, guys. MasterCard could be a nice buy. 280 to 290, that general area. That's where I'm looking at least to pick up some shares. So MA, Uber, those are two that I'm watching, and another one here is Nike, ticker symbol NKE, very similar to MasterCard here, where it got overheated. Now we're retracing down to the 180 SMA on the 4-hour chart, and notice if we extend this little line on Nike here, we're actually approaching $95, which also is a major level of support. And it's crazy, guys, because I've been talking about Nike and saying I'm being patient until the mid-90s, low 90s. That's where I'm looking to buy. And in yesterday's video, we were talking about the importance of patience and waiting for opportunities, and now it's coming into fruition. It's funny how I said that yesterday. Now we're getting these opportunities, but we still have to be patient and now wait and see what the trend ends up performing, what it ends up doing, right? So Nike, I like mid-90s, and maybe even 92. That's a nice entry there for Nike. Another one that I'm looking at here is Facebook, ticker symbol FB. Finally getting a bit of selling here in Facebook. Looking at a pretty strong support at 220 to about 225. More like 225 to be more specific, guys. And at this point, we are breaking a bit below it. So in the last 25 minutes here and heading into tomorrow, I'm looking to see, okay, is Facebook going to end up making its way back up into the high 220s? If it does, that's where I'm looking to enter it, guys, quite honestly. But if it doesn't, that's going to tell me, okay, maybe the bears have a lot more push on the stock. Maybe the bears could push the stock down maybe into the 220 level, to like 220 on the dot, or maybe even into the 215s, right? 215, 216, that could also be an entry point. So overall, I like Facebook. Bullish Facebook, just being patient on the entry point here between $215 and $220. And another one here is going to be SQ, ticker symbol SQ, and this one is also finally pulling back. We hit 93 bucks, higher high, I believe, yesterday. Now we're down 6%, approaching an old resistance as a new support at about $85, $86. Also at that 50 SMA here on the 4-hour chart. So this could easily be a dip buy, in my opinion, when it comes down a square. And when we pull back a bit to the yearly chart, you guys can see it's very critical for it to hold the mid 85s. At least from a bullish perspective, right? And pulling back even further to the 3-year chart, if we hold 85, guys, watch out above, especially if these markets turn back around, and we'll see if that ends up happening. But from 85 up, there's a lot of potential to the hundreds in this particular stock, at least in the short term here when we're looking at it from a swing perspective. And another one that's holding up pretty decently at about the high fives and the $6 level is Neo stock here, guys. I'm not liking, looking at it now, I'm not liking how it's failing at the 50 SMA here. I'd like a close above that for the bulls, right? But ultimately, I'm liking how we held 550 this morning. That was a support that we were looking at from a couple weeks ago. That's very good. We held 550. That's also putting us on top of that 50 SMA. And ultimately, I'm looking to see tomorrow, the next day, which is Monday, Tuesday, we'll see. Does this end up getting back into the sixes, guys? Once it does, once it breaks, again, that 50 SMA, 180 SMA here on the 5-day, 5-minute, that's when I'm going to be like, okay, Neo from $6.20 back up to $7. That's the move that I'm looking to make. So overall, guys, that is what happened today in the markets. Those are a bunch of stocks that I'm watching and kind of what I'm doing here. I'm being very cautious, very cash heavy, just being very, very picky with what I'm looking to trade. And take a look at gold, guys. And this goes to show for you newer people out there, newer males, females watching. And by the way, I've noticed a lot of new females have been watching the channel. That's good, guys, because my audience has been 95% male. It was a year ago. Now it's like 87% male. So that goes to show over time more females are getting into investing and trading, which is absolutely incredible, right? So you can see gold here for you new people out there. Gold up $14 today. People really view this as a safe haven asset. They put money in this when the overall stock market is going down, when there's risk on the dollar, the economy, the traditional system, whatever. So gold could be interesting, a move up to 1800 if the markets pull down even further, and by markets I mean S&P 500. We'll see what ends up happening there. So overall, guys, that's it for this video. If you enjoyed it, found value in it, as always, hit that like button for me, consider subscribing to the channel, and don't forget to claim your 2 free stocks from Webull valued up to $1,400. That's linked down below in the description box. All you have to do is put in $100 into the account and you get those 2 free stocks. And hey, who doesn't like free money, right? So I'll catch you all in the next video. As always, thanks for watching. Stay safe out there. Peace out.